Welcome to season 2. How are you? Fernando Pettineroli from our office in Sunny Isles Beach in this new season of Open House Miami from our office in Sunny Isles, prepared for my Noemi Ramos. That did a great job from Nabu home. Thank you, Noemi. Today we're going to have Jack McCabe with us to see analyze this year, this crazy year that actually was good for most of brokerages, and see what's coming on the following year. See how this COVID craziness, this COVID madness that we're living is generating business now, and what will happen next. But with more, I'm going to Cabo in Mexico, where is our dear friend Jack McCabe today. Jack, welcome to the show. How are you?
Thank you, Fernando. Bien, amigo. ¿Cómo está?
Yeah, see, your Spanish is coming strong.
Improving un poquito.
Hey, I can see you in the back, Mario Cortez. A good life, huh?
Well, it'll be a good life once we get through this, yes. But I can't think of a better place to be if you're going to be in the middle of a pandemic globally than Cabo San Lucas.
Jack, we were starting the show after this 2-3 months off due to the COVID. Basically busy, actually very busy working. It's actually been a great year for most of brokers. And what is your vision of this 2020 in your position?
I think most all the brokerages in South Florida were extremely worried when the quarantine started that this was going to shut down their businesses, that sales would go through a sieve. And just the opposite has happened, because the Northeasterners have decided, why wait another 3 to 5 years to make the move to Florida? Let's do it now. Life is too short.
Life is short, exactly.
And there's a lot of very negative things that are happening in the Northeast, in New York City and other states in the Northeast, and Illinois and California. And so many people that were putting off moves or thinking about it in a few years have decided to buy now. And so many brokerages in South Florida are experiencing their best years, their historic best years in 50, 60 years. Now, is that going to continue is the big question, and the answer is no, it's not. Because we have a lot of things that are going to start happening. There's been, as everyone knows, an eviction moratorium where you could not evict people for not paying their rent. That will end at the end of December of this year. Many people have not been able to pay their mortgages because they have lost their jobs or they've been without work for months and months. Over 44 million people in the United States filed for unemployment. As a comparison, only 6 million filed for unemployment during the Great Recession. And we've had that happen in less than a year. On top of that, there's another 20 to 30 million self-employed Americans that have not been making any money and have not qualified for unemployment. Many have not qualified for any of the financial incentives that the federal government has offered. So their mortgages have been increased. They haven't been paying them. Many have been able to negotiate with the banks to add those payments at the end of the mortgage, which means it's going to cost them much, much more in interest. Others are going to be looking at foreclosure. Now that, I expect that these two major events are going to begin in 2021. The evictions will happen first. The foreclosures will start as a slow wave toward the end of the year and will last at least 2 years and will be considerably more severe than the Great Recession.
Do you think it's going to be worse like we had in 2008?
Yes, I do.
For those before I'll interrupt you. I want to tell you that Jack was one of the only 4 people in the world that predicted the crisis of 2008. And He was on the dot, like how long? 2 years before, right? A year or two before.
Yes, a lot of people did not believe me then, tried to discredit me then. But things played out as I had predicted, and I believe they will again this time around.
And then we learned the hard way, right? We learned by losing properties, no. The truth is that you were saying it, and other maybe two guys were saying it, and we all just didn't prepare. We just had our pants down all the way, and we suffered.
Many people, as you know, lost money, lost everything. Some lost their businesses. Major builders went out of business. This time around, I think people are more aware of what could happen than they were last time. They understand that this crisis could be much, much more severe. Many of the jobs are not going to come back. Right now, in South Florida, for example, the restaurants can operate at 50% capacity. The owners cannot pay their bills, let alone make a profit, with only 50% of the business. That means also only half of their employees are working. So many of those jobs are not going to come back. People are going to have to find alternative careers. Many are finding now that they are going to pursue their hobbies and their interests as their careers, and that they're able to do that remotely, which is also encouraging the migration down from the Northeast. But the problem is the Northeast properties are going to start going down in value. People are not going to be able to continue to get the type of sales prices up there and then afford nice properties down in South Florida.
So the window of opportunity is really short for those that are exchanging bricks for a brick in New York or a brick in Florida to symbolize it. They already have a very small window of opportunity here.
We're going to continue to see a flow, but I think that there's been a big spike this year. So, I mean, Florida is positioned better than most all of the United States, and that it will continue to be the #1 state for migration. So that's a good thing. But at the same point, we're going to see a lot of people that are going to have to leave the area because they cannot afford it. They don't have jobs, they can't afford their rent payments or their mortgage payments. We'll see others that will replace them. Florida overall, and South Florida in particular, will weather this storm better than others. But Florida is an international location. Miami is an internationally desirable location. That will continue, but it's reliant on people having the ability to sell their properties where they're at for a good price and move down. If they cannot do that, then that is going to curtail some of the potential migration. So the other thing is, I think that there is an oversupply by our research of the number of new luxury condominiums. Now, I in particular believe that many people are not going to see them as desirable in the future. They're going to say, you know, do we want to live in an anthill? Do we want to live in a possible super spreader area of viruses now or in the future? In a hurricane area where we may lose power and we have to walk up and down 40 flights of stairs, where we may not get water. I think we're going to see more of a move to single family homes and townhomes that are out in the suburban areas. And I think because of these reasons.
I'm actually, I have lots of questions here accumulated since we announced the show from developers, from owners, from tenants, because really the way we live has changed, you know, like with COVID. And we can see clearly the tendency happening already, that people moving to single-family homes or larger condos that have the ability to function as a single-family home, or like the condos on the beach, with work space. The W, I have to say also, I was watching Max Strang the other day saying the same. The WFH, not to confuse with WTH, as work from home space. That is a new acronym that we need to learn to use more and more. That's coming in the new designs. With WFH in mind, I see developers really are working very hard also single family now.
Well, and I think we're also going to see a trend to generational homes where it's not just the parents anymore. It may be the parents, their parents, and their children. It may be 3 generations. So it may be entirely different multi-use type of home structure in the future. Because I think families now are going to come together out of desire, but also out of necessity. So I think we're going to continue to see this as a long-term wave. That the problem is with that in South Florida is there is very little vacant land for single-family home construction.
Absolutely.
Miami-Dade County is almost entirely built out. It's nearly impossible to even find a 20 or 30 acre tract to build single-family homes. Broward County is pretty much the same way. Palm Beach County has some land, but it is primarily in the northwest area of the county and out into the agricultural land, out into the orange groves. So, I think we're going to see Palm Beach County actually really benefit by this in the future, and that Miami-Dade and Broward, I think, are going to struggle with large condominium inventories that are going to have a very negative effect on prices. I don't know if it'll be a 50% drop like we saw in the Great Recession, but it could easily be a 30% drop. And I think people need to be aware of this and prepare for it.
Correct. I believe it's something that we're already seeing in the last year, a drop on the final price at closing. So we're talking with friends that work recently on a seminar that we did in Armani Casa with agents from all over the country, and they were talking about aspirational price towards the final closing price. That is a completely different result. So we have these beautiful homes in LA hanging from the mountain, hanging from a cliff for $50 million, and then they sell for $15 million. So, and I see that it's a tendency, it's a phenomenon that they are observing for a long time already, and we are starting to see. I believe it's going to happen more and more.
I think, and what I would recommend to people to do, and to agents and brokers, is if you have a client that is looking at buying in a particular building or in a particular development, to go into the tax rolls and take a look at what actual sales prices were compared to the previous time that they were sold. In many cases, you will find that not only did they not go up, but there were incredible drops in prices. The same thing with the MLS for agents. If you look at what list price is and what actually closed price is, it's considerably lower. Now, this is in the luxury end. I happen to think that during the Great Recession, where all prices went down, that this time it's going to be more segmented. I think the homes in South Florida that are under 400,000, this is going to remain a strong market. There's been very little new development in that price range and increasing demand. And anytime you have growing demand and a static or limited supply, it pushes prices up.
So this is some period for tranquility to not just to listing agents and buyer agents, but also to owners. And people that is in the 400 or less will suffer a little less than people that is on the higher end.
Oh, yeah. And if you get a listing that's $400,000, generally it sells very quickly. You have multiple bids, many of them cash, and a lot of times above list price in that segment of the marketplace. Now, for the $1 million and up, especially 1 to 5 million, I think is going to be hit the hardest. And I think we're going to see prices decline in that segment of the marketplace. The 5 million and up, that's a real good question, because the people that buy these properties generally they have lots of money. They're generally very wealthy. They can buy these cash if they choose to. Many of them may have 2 or 3 places. So I think that the bottom of the market will be strong. The upper end could be very good. It's the in-between, I think, that is going to see the hardest hit, the biggest declines in prices.
I have they're watching us in Facebook, live, in YouTube, in openhousemiami.us. Regards from Magali Castro in YouTube. Jose Martin del Campo Rivera is also following on YouTube. Rosana Chavas from Argentina. Esperanza Berrio also sends regards. Question on my private messenger. Gaby Solis says, I have one of my best years this year. I work on high-end short-term rentals. What is going to happen with that market?
Well, most all of the new apartment construction, in South Florida has been Class A and A+. The land costs are so high, the construction materials have increased, labor has increased. It's been very difficult to do a more affordable apartment complex in South Florida. And that's why that market is such high demand and waiting lists for openings. But now the upper end, and that's where the market has generally been, I think once again has been strong this year. The question is, will that continue? A lot of people, I think, right now are renting as opposed to buying to see what happens in the marketplace. In case it goes down, they want to wait to take advantage of that. But there's a lot of, the world is in a state of flux still at this point. While there's talk of recovery, we are now 7 months into this pandemic, and we still have millions of people out of work. We have companies that are closing. We're going to see much more of that in the future, quite honestly. So until there is a vaccine, or until there is something that comes along that makes people feel good about going out and spending money again, and in particular the segment of the population that is 50 and up, that tends to be the most affluent and well-heeled. Right now, they're saying, we're comfortable here. Let's wait and see what happens. There's no rush. I know down here in Cabo, which is entirely reliant on tourists, the market has been very difficult down here. And one of the reasons I'm here is because I think there's going to be tremendous opportunity in buying distressed properties down here and reselling them in the next 3 to 5 years. In Miami, I think because there's been so many new complexes built, that we are going to see next year, we are going to see a dip in that market. You'll start seeing 1 and 2 months free. You'll start seeing additional concessions, free valet garbage service, or concierge services, other services to try and differentiate these developments from their competitors. This has been a good year. You should be very happy. You've probably done very well. Next year, I don't think it's going to be the same.
John D., developer in Palm Beach, says, I'm a small developer. Should I focus in building apartment or building condo or townhouse for sale?
That's a very good question. if I was like John and I was a small developer, I would be looking to do smaller projects. If you can turn a profit, if you can figure out a way to do a public-private partnership and acquire grants and other things to do more affordable housing, I think that will be very strong in the future. I think there's a great market for that. If you can do more affordable townhomes, I think there's a great market for that. I would personally stay away from the upper end in new development, at least for a couple of years, because there's an oversaturation coming on the marketplace right now. You will be competing with others that are willing to cut their prices and other things to move units and pay off their debts. And it will be very competitive as a small developer. So I would say focus on the greatest demand area, which is going to be more affordable lifestyles and living. So I wouldn't do a Class A apartment complex. If you can figure out a way to do a Class B or C, I'd look at that. I'd look at doing townhomes if you can build them in the 250 to 500,000 price range. I think that's a strong sweet spot. You will find buyers for these units. You won't be sitting on them empty.
Dimitri from Sunny Isles. I was planning to buy commercial pulp property or strip mall. What should I do?
Hold on to your money and buy existing strip malls, because you're going to find that there's going to be a tremendous amount of them available in the near future. I have friends and clients that are developers that own shopping plazas that are pulling their hair out right now because 25% of their tenants are paying their rent right now. Yet they still have their obligations with the bank. And in some cases, they've been negotiating. They've got other big box stores that are closing up. Their big anchor tenants are closing up. If you're looking at strip plazas or even small shopping centers, I would say don't look at developing, look at buying existing, because you will be able to buy those for much less than the price of new construction. And things will come back eventually. Things will come back. But you have to keep in mind, why do you want to build something that costs more money, that takes so much time? You have to go through all the approval processes. It may be a year or two before you get out of the ground. When you can buy things that are in a distressed pricing strata where you have much more opportunity for increasing profits.
The big issue, Jack, is the issue of inventory that you were mentioning. I've been seeing all kind of projections. I know the people that say that there is 10 years of inventory doesn't know what they're talking about. And the previous projection was in 2008 when people came saying, oh, there's 20 years of inventory. It really went away in less than 2 years. What is going to happen with our inventory now? What should we tell the owners?
The reason that inventory went away was because hedge funds stepped in and bought in bulk in many cases, or developers lost properties to the banks. The banks sold them at half price to get them off their books. So when there were these projections and they were accurate, had things played out and things had sold at normal price, but previously hedge funds and these other large corporations were not willing to get into real estate. We saw it with single family homes in particular. They never were willing. The only investors in single family homes were mom and pops. They were individuals that had small inventories. Then we saw companies like BlackRock, Colony Capital, and others that started buying up not just thousands, but tens of thousands of homes, because there were so many foreclosures. They could buy them close together, and they were much easier to manage.
Right.
So the operational cost and the management were much easier. And then we saw this corporatization of single-family homes turned into big rental pools. Now, I think that we're not going to see that this time around, because I think single-family homes are going to become much more desirable in the long run than condominiums and living in high-rise towers. And we may see, I happen to think we're going to see something very similar to the Great Recession happen in Miami again this time around, where I think there's already, you can call them vulture groups, opportunity buyers, whatever you want, but there are hedge funds and private equity groups that are lining up to take advantage of the good deals that they sense. It's like blood in the water. They can smell it. They know it's coming up. But the problem with that is, if you want to be one of those buyers, is you are going to be up against so much competition that it will never really allow prices to fall as low as they may have. And so the profit opportunity isn't as great. So this time around, where everybody was lined up and circling Miami during the Great Recession, there may be better opportunities in other parts of the United States and in other countries.
Correct. Jack, I work mostly with sellers, and probably I'm talking right now this last 10 days with about 20 sellers that are in distress. That they are suffering they're not in the market yet. They're owners that are in distress. What we've been telling them is that many times we find that they still have some equity on the house to recover. If we should measure a window of opportunity, these people that still has equity on the house and maybe can sell before the foreclosure starts or even in foreclosure, how long you think is that window of opportunity to be able to rescue equity from a house by selling it?
Well, if you need to sell, get it on the market now. No. Sell now. Don't wait. It's not going to get better for you. It's probably only going to get worse unless you're in that 400,000 and below price range. And then we still may see price increases. I happen to think there will be. But if you're above that, now is the time to sell, because it is definitely turning into a buyer's market. I know a lot of agents have had fantastic years. They may not agree with that statement right now. I'm talking about what's coming up in the next 2 years. So if you need to sell, get it on the market now, get your equity out of there, and become more conservative. If you're thinking about buying, keep your powder dry, so to speak. Wait, because there are better deals that are going to come up. And if you're an investor looking for deals, once again, 2021, 2022, with each downturn, there is also great opportunity, is what I tell people. But you have to be able to have money. Cash is king during these times. You have to be able to have money to take advantage of those opportunities. So if you're a buyer, hold on. If you're a seller, get it out there now.
The other segment that the houses on the water, the houses on the beach, Golden Beach. Is this the right time to go out on a new construction on a super house, 10 million and up?
Well, the developers I know that are looking at future development are looking at topography maps and where is the highest land, not necessarily the best beachfront, because we know that seas are rising. Correct. We know that there are some buildings right now, some streets, A1A for that matter, when there's a full moon and high tide, that the roads are flooding. A1A is flooding now. Other properties are flooding. They're having to spend massive amounts of money to try and increase the drainage, to add pumps, to raise the level of the streets and the properties because of what's ahead. So, my advice is, if you're looking at beachfront, you have to consider several things. If you're a developer, are you looking to do a big project or a small project? If you're looking at doing a big project, you could be caught in an economic downturn like now. I would recommend doing smaller projects that if there's any changes in the economy, you can get in and out of much quicker and not end up with 30 or 40% of your units being unsold, which is where your profit is.
How about single family?
I'm sorry?
What's a luxury single family?
Well, single family, I think, is definitely, if you can, single family is going to go up. If you can find, there's going to be greater demand for single family homes and townhomes. If you can find the right piece of property to do single family homes, I think that is the safest product type for development, the least risk, and it's going to have the greatest pool of potential buyers in the future. So the problem is, where do you find it? Because in Miami, Dade, and Broward, you almost have to tear down something.
Yeah.
And you have to buy a number of properties. You have to combine them to do anything large enough to do a single family home development. So that's the tough thing about it. We've seen a lot of course, many of the golf courses have gone out of business and are now becoming single family home neighborhoods. This has been happening all over Florida with the attrition of golfers. So those are good targets. And I would pursue owners. It may take you a year, but if you can get, a nice large golf course for development at a reasonable price, that may be your best bet.
Jack, I really want to thank you for your time. It's been super rich to have your inputs on this. Especially, I appreciate that you spoke also to the people that is right now at home in those tense moments, those tense days, that what to do, what to do with the house if I cannot pay it anymore, or what to do if my tenant is not paying me. It's been very good.
These are very difficult times across the board for everyone right now. But all I can say is we have a tumultuous time ahead of us. Things will get better, but we have a year or two yet ahead because of this pandemic that we are going to have to struggle through. And so my best advice is to be conservative, to not spend money if you don't have to live within your means as best you can, because you may need that money in the near future. It may make a big difference for you and your family.
Jack McCabe from Mexico, from Cabo. Thank you, Jack, for being with us today.
My pleasure as always, Fernando. Good to see you, my friend.
Good to see you, Jack. Stay well. Jack McCabe from Mexico, our expert in everything that is numbers and everything that is watching this. I have to take my hat to Jack on that one, because he saw 2008 coming so clearly, so perfectly clear when it happened, and he's not very optimistic for what is coming, but we're preparing. We're preparing. Attention owners, if you are in the process of maybe going into a foreclosure, if you stop paying association 6 months, if you think that you might not be able to pay taxes, we created a page for owners, rescatar.us. Actually, it was prepared for Latin America, but it's in English, you can use it, in which our goal is to rescue equity from the houses before the short window of opportunity dies in 2021. There is still a very, very, very hot market of people buying right now properties, especially if they are a little bit in stress. You need to use this window of opportunity. We will provide you free with the most important data you need right now, to provide to your lawyer, to provide to your bankruptcy lawyer, to provide to your divorce lawyer, and other two of the great issues that are happening right now. That is how much your house or your property or your condo, your house is really worth. You need to know that. We provide that for free. All you need to do is to fill up minimum information that we need to prepare this info in rescatar.us. You can do it right now. I recommend you to do it, and we will answer right away with all the documents that you need to take to make a decision mostly. Because I personally, I did went through this in 2008. I did lost money. I did lost property. I went through it all. I went through every lawyer. I went through all the advices. You know, the bankruptcy lawyers say, "Oh, yeah, we'll delete everything," and it's not true. the equity also gets deleted when that happens. So you better watch out how much your house is worth. Because if you have money in the house, you better prepare to sell with time. Nothing fast. You know, your credit will not change overnight. Nothing is going to change overnight. But if you see that you are in that position, this is the moment that a real estate agent can help, and is by giving you the right price of your home on the market and how your house will really perform. You know, how long it's going to take to sell. Time, money, time, money, time, money. Very important. Very two key ingredients on this probably 5 months window of opportunity that we have available to recover equity from houses that might be in danger of being lost. My phone number is 786-505-4007, but go there and you will find it. Thank you for being with us in Open House Miami, our first show on this season, season 2, from our office in Sunny Isles Beach. Please feel free to leave your comments, subscribe, people that is watching YouTube, or people that is, we tried to do LinkedIn today. I don't know if it went through. It's the first time. People in Facebook also try to subscribe, so we're going to do at least once a week to have updates, not just for real estate agents and brokers, but also for people that is on the market right now. Thank you for having us, okay? Have a great day in health with your family. And if you're in distress, if you see that it's coming, don't wait till the last minute. Trust me, it's the worst possible idea to wait or let the bank make the decision for you. See you soon. Take care.